I'm Mark Porter, CEO of Highwire Networks, Inc., and with me is Chris Sorensen, Executive Vice President of Finance. We're here to talk about the 2021 results and the filing of our 10K, a little bit about the fourth quarter in specifics, and help provide some color and analysis on the filings for us. With that, I'll turn it over to Chris to discuss the financial highlights for the quarter and the year.
Thanks, Mark. Just to start off, as we did last quarter, we're going to talk about numbers on a pro forma basis. That gives us the most comparable apples to apples results to prior year. One of the other things to note is the JTM divestiture, which we announced in February of this year. In these financials, that's going to be reported in the discontinued operations section of that. So the numbers I'm going to talk to here in a second are going to exclude that performance. One of the other things we also mentioned last quarter that I'd like to highlight again is the impact of derivatives on our financials. The accounting side of derivatives have those marked to our stock price for the company. So we tend to see a lot of valuation change on the balance sheet for those, which then trickles over into the P&L. So we could see large gains and losses on those. However, those are a non-cash transaction and not related to operations. So when we talk to our numbers, we tend to exclude those because they just don't give us a good judgment of how we've performed. And then lastly, we have seen an increase on one-time expenditures in Q4. We talked about this as well in Q3. Some of those increases are driven from legal fees, accounting fees, and some of the other things that are related to the M&A activity that has occurred. We do expect those to continue into 22. As that activity tends to ramp up and down based off of the different things that we're doing to execute to our business model. On a revenue basis, Q4 of 21 came in at $12.2 million versus Q4 of 20 at $8.6 million. So on a growth basis, we saw a very nice increase year over year of about 41%. As we saw in Q3, a growth rate of over 20%, we continue to see those increases, and our sales is still firing on all pistons. And seeing some nice growth as we continue to move into 22. Lastly, I'd like to highlight one of the changes that you'd expect to see coming in 22, and that's around our segment reporting. We are looking at adjusting the way we report our revenue and operations. We're going to break those up into different categories. We're going to highlight managed services and technology. Main reason for this change is it just is a better indicator of the performance of our sales and operations team. Managed service is largely contract-driven businesses, and those contracts tend to be greater than 1 year. So from a valuation standpoint, they just have a much higher value to our organization on a reoccurring revenue basis. So it's just stronger sales and just better overall strength and performance of our organization. I'm going to turn it back over to Mark, and he's going to talk about highlights for 21.
Thanks, Chris. One of the things I'll pick up where Chris left off on the reporting segment is we believe it really truly will start to allow investors to analyze the business properly as we go forward and unlock the true potential of the organization. As we've really focused, we talked a lot about through the second half of 2021 around how we're going to market and aligning our sales organization and our marketing teams to capitalize on the collective strengths of the business. So we want to start showing that to investors as well in a different way. The business fundamentally changed in 2021. While we closed on the acquisition in June, I believe I took over as CEO in early March 1st, I think, to be exact. We had a lot of work to do, and we are very proud of what we've done as a team. We had, in the second half of the year alone, we had a 300% growth in paying customers on the Overwatch platform. That was outstanding. We've seen continued momentum in that space, and we're really looking forward to what 22 brings there. We had 100% growth in our channel partners in the year 2021, and those channel partners are the lifeblood of that business. Those are net new channel partners that we talk about in mostly the MSP space. That doesn't even count the fact that we're starting to really capture the imagination and some of the wallet share of our existing customers in our technology businesses and really start to cross-pollinate those relationships. And that's happening not just in Overwatch, but across all of our businesses. The sales team has been able to synergize the customer base, and that's really the number one asset of our organization. We have over 600 channel partners across 3 different channels, really kind of 4 channels at this point, but those channel partners fuel our growth. And when we acquire a new channel partner, we gain access to their entire customer base, and we're servicing their customer base, and we get access to their entire sales force. And as we win their hearts and minds and they begin selling our products through their organization, it is a networking multiplier effect of our sales efforts. So we're really excited about that. Key highlights in our staffing business. The staffing segment of our business finished the year on a run rate of about 25 million and trending rapidly higher, setting us up for a phenomenal 2022 in that business. By contrast, when we took over, we were looking at about a 14 million annual run rate. So really significant growth. More importantly, the margin trend in that business is substantially higher, double digits higher than when we took over. So the profile of new business is bringing the gross profitability significantly higher, and every penny of gross profit is a significant contributor to the operations. We booked over $10 million in new business in the fourth quarter in our project-oriented businesses and our managed service-oriented businesses. That's huge. That's not total contract value in bookings, because that's largely focused on the project pieces of it. We launched new monthly recurring managed services, and in one of those services, concurrent with the launch, we booked a contract worth more than $600,000 annually, with 4 renewals subsequent to this at the customer's options. That's a phenomenal start to that business. We expect far more in 22. We divested of our JTM local business, our local commercial electrical business. We divested of that business because we expected substantial drops in revenue and losses for 22. We feel that the business had hit its zenith, and it was no longer in line with our strategy of national and global operations. So we kept the national operations because it fits in areas like our data center partnerships, our large multi-site rollouts in retail and hospitality businesses, and we're continuing to focus on bringing that value for our partner channel. But it'll only be for national customers that have the potential for large rollouts. And again, that's typically retail and hospitality sectors, restaurant sectors, et cetera, customers with large real estate footprints. So that's that. Overall, we're very excited about 2022. We pushed hard in Q4 of 21 and really focused on setting the business up for long-term sequential success. We've said that a lot. That is the focus of everything that we're doing. We've gained some really significant customer relationships. We have some significant potential relationships on the table for 22, and we look forward to continuing to talk about those. Everything we're doing is to drive long-term value. I'll close with a little bit conversation. I know it's a hot topic among some. We've really focused on any financing activities we've done. We've focused on willingness to pay slightly higher interest rates to avoid dilutive activities. I know there's been a lot of dilutive activities prior, but we continue to look for opportunities to generate our own cash flow and get the company focused on profitability and operating from our own cash flow, and to minimize any dilution going forward in the future. As I've said before, I'm committed to only doing that where it makes sense, where we're adding accretive revenue or opportunities, and only if absolutely necessary. Finally, I'd like to thank everybody for tuning in, continuing to support us in our activities. We're really looking forward to executing our plan. Part of that plan, as Chris alluded to earlier, we talked about one-time expenses or continuing to run higher expenses and consulting fees, but part of that plan is also focused on our marketing and sales efforts. We are intentionally running those a little bit on the high side, and the focus on doing that is growth. As you see, it's starting to have significant impacts The fourth quarter growth over the prior year was substantial. We expect to continue that trend. As we've already stated, we had put forth a forecast. We're looking for about 30% growth. That forecast might change a little bit related to the changes in JTM in terms of raw numbers, but out of our core continuing operations, we continue to expect 30% growth in 22. We're seeing some easing in the headwinds related to the supply chain pieces. We're continuing to work very hard with our partners to forecast our revenue more granularly and accurately. And as we have that information, we're going to make that available in our forecast. So couldn't be more excited about the way the year finished up and the way 22 is shaping up. We thank all of you for your investment, and we look forward to talking to you again shortly.